For a closer look at what is at stake for the energy market, Sankey Research President Paul Sankey joins us now on set. Paul, good to have you with us. I don't know why you're not CEO of this thing, but...
Of Sankey Research?
Yeah.
I'm everything. I'm the janitor, I'm the CEO, you name it.
So it was strange because this proposed cut wasn't mentioned in the final communique, and then some other countries independently come out with their own plans for cuts. I mean, that's sort of what was not convincing about what they wanted to telegraph to the markets?
Yeah, it wasn't convincing. I mean, it's already a problem when OPEC's cutting, and they've already cut. And as you say, they've got a huge problem with U.S. production levels. I mean, it's extraordinary. And what you've got to remember is the U.S. industry is planning on 60, and they're delivering this, 13, 14 million barrel a day type number, which is just incredible. So it's a real problem for OPEC. And if you look around the world, Guyana, there's maybe some concerns there at the moment, but basically Guyana, Canada, Brazil, which was part of the OPEC conversation today, are all delivering growth. We're only 2 or 3 years from, $40 oil in 2020, negative oil in the U.S., and yet we're seeing this just extraordinary performance from the industry. And it's a problem for OPEC.
So if OPEC cannot bolster this price or put a floor there, what is the floor in your view?
That they flood the market. I mean, we've more or less been saying potentially Saudi needs to just flush this thing out. And in that case, Saudi would then take some of its spare capacity. Most people think Saudi capacity is around 11 million a day, 11.5 million a day barrels. They're doing about 9 at the moment. So they could just add 2.5 million barrels into the market for 6 months and just flush it.
The M&A around the space has been remarkable. I mean, we talked about it, Exxon, Chevron. We hear from Oxy. Clearly, everything's in play. Marathon Petroleum with a whisper. PSX, we talked about Elliott taking a stake. I think that stock's at an all-time high. So some of these downstream plays are starting to show their mettle. Thoughts on that?
Well, they consolidated, right? And that's really what the upstream industry is doing. So I'm actually just going to dinner with a group dinner with the CEO of Chevron. One of the Chevron lines has been, we've got too many CEOs per barrel of oil. And so what they're doing is very aggressively consolidating with the rest of the industry to make it just more efficient, economies of scale. If you look in the U.S. now, you only have 3 major refiners, right? And as you mentioned earlier, Shell has pulled out, BP's much smaller, et cetera. The big guys are a lot smaller as well. So the industry's consolidated. It's really performing well. And the Elliott letter that you referenced to PSX was really about the underperformance relative to Marathon Petroleum, where Elliott took significant action to make it more efficient and more shareholder-friendly, and now they're essentially turning their attention to PSX. There's not that many deals that can be done still in U.S. refining. There's just not that many refineries left. We have like 6,000 upstream companies. I mean, a lot of them obviously are tiny, but there's still major potential for deals. And as you mentioned, the latest story is the Oxy jet flying to Omaha around the idea that they're going to buy Crown Quest, the 10 billion-ish play that's a private in the Permian. So we could get another deal. It was in the Wall Street Journal yesterday. We could get another deal tonight.
So this flush, what does that look like? And it would theoretically be for a short amount of time, but the impact on energy stocks, I would imagine, would be pretty immediate.
Well, it's precedented. It's happened twice in the last 10 years, right? 2014, Saudi said, if you don't cut, we're going to flood. And they flooded in 2014. Oil was about 110 and had been over 100 for 4 years into 2014. It basically went in a straight line to 50. The Thanksgiving OPEC meeting, it was 75 when Saudi announced the flush. We went down to 50 in January, bounced, and you hit 27 the following year in February of 2016. And then, of course, you had the COVID flush, which was truly crazy, where oil went negative. So, that didn't work out great for the price. So, yeah, it could be pretty dramatic. And you've got to take the price down to the level at which you stop the U.S. growing. And I'm telling you that they're planning on 60 and they're growing. So you'd have to probably take it below 60 for sure in order to really change behavior. Now, of course, the rig count is falling, but production's not, which tells you there's productivity gains. So it's a tough one. It really is. It's a knotty one for OPEC, especially as demand is more than likely rolling over here.